What's going on, YouTube? Mike Schiemer here on Frugal Finance TV. I finally can film another video. And I wanted to talk about something that I'm really passionate about, that I really got excited over this year. Other people, they don't think it's a big deal, but I do. With all the inflation and the changes with the Fed, all the financial craziness and volatility these days. This year I started really investing. I took my money out of my garbage bank. I mean, it's a great bank. It's one of the biggest in the world. But the interest rates were awful on my savings account. I don't know how much money, being a saver, a silly saver as I say now, how much money I've lost just due to annual inflation by keeping so much money in that bank account for so long, in my checking account and all that kind of stuff. So anyways, this year I've really stepped things up. I took all that money, almost all that money out, except for like money for bills and just emergency, super liquid holdings. But I took it all out, invested a ton of it in my new dividend portfolio, my personal investment portfolio. It added it to my IRA, which also is pretty much I think it's all U.S. Dividend stocks right now. So that's been, that's going to be compounding. So I added to that as well. You can contribute $6,000 or $6,600 per year, and that might increase over time if you have an IRA, like I do. So, but the majority of money, a ton of my money, I now have. I'm finally getting to the point in a high yield savings account, an HYSA. I'm just gonna get some air going in here, but I'm waiting for something to open. Anyways, so high yield savings account, they used to be super low. I mean, or you would have to do a CD or money market. You'd have to have your money locked up for 6, 12, 18, 24 months, whatever it's going to be, if you want to get any decent interest rate. But now you can get 4 to 5.5%, maybe even like 6% on some kind of more risky financial organizations. But in that, the thing is that at least while the interest rates are high, that money is guaranteed. So while you can, the market might on average return around 8% per year, there's no guarantee. You can lose a lot of money. You can lose a ton of money in the market. I've been usually successful, but it takes time and education to do that. And a lot of people, they pay money to financial advisors, people who invest their money for them, and stockbrokers, whatever. They pay fees, or they pay fees on their ETFs or fees on their mutual funds. I pay nothing. So anyways, you can make a lot more money in the stock market, of course, or other securities or other investments like real estate. But you get guaranteed 4.5% to 6% on your high yield savings account, and that's really hard to beat. And that's just income you can. I mean, I invest it all back in, but that's income you can count on, month after month after month, and it just gets bigger and bigger if you are, not taking the money out. And you could take that interest if you want, and guess what? Put it towards your mortgage, or put it towards put it towards your stock investments. I mean, whatever you want to do. It's a no-brainer to me. It just depends on how much you want to put into your high yield savings account. Okay, so it can be a small amount, or it can be you know, can be 10% of your nest egg, could be 20, could be 50. I mean, you do whatever you want. It is good to talk to a financial professional to figure that out, but that's going to be really up to you. I just know I have good interest rates. I pay 0 fees, and I am, making a ton of money each month. And I'm also doing, tons of stocks, okay, on my 2 portfolios. So it's not like I'm not investing in the stock market. And it's not like I'm not reaping those rewards, so, because I am. But definitely take a look at some of the accounts available. Make sure you get a reputable bank. The regional banks might be a little iffy, or bank that's under kind of some scandal, or if they have financial issues, then you might not even. And then there's like Robinhood and SoFi and things like that are newer financial companies, but they don't have the long track record of some banks. So I mean, it's really risk benefit analysis to figure out which one you want to use. But I would certainly make that a part of your financial strategy. I am not a financial professional. That's just what I use, what some other people use. And, it's very low risk. Your money's insured, FDIC insured for up to $250,000 per account, I believe. So if you get past there, then you should probably open another account. But anyways, thanks for watching, guys. I will be posting new videos, every month, hopefully every week. And I'm starting a 3rd channel too, Frugal Family Fun. So I'll be posting more about that soon. So thanks for watching. Like, comment, check out my links below.